In this video, we're going to look at the petty cash book. Now, before we look at the petty cash book, we need to say what petty cash is. And it's a small amount of cash that's held by a business in order to pay minor expenses. So that might be, say, the cost of the odd taxi fare that's taken by an employee, perhaps the purchase of magazines and newspapers and tea and coffee for the office. So small amounts. But this petty cash is separate from the main cash account, and it's managed and run separately by someone that we would describe as the petty cashier. And this is typically a responsible person, say perhaps a manager's personal assistant. And they will make sure that the petty cash is managed properly, and they'll also maintain the petty cash book, which we often abbreviate to PCB. Now, associated with petty cash are petty cash vouchers, and an employee will prepare a petty cash voucher when they want to claim money from the petty cash. At the same time, when they buy something using petty cash, they'll also get a receipt from the store, and they'll keep that receipt with the petty cash voucher. So what should be on the petty cash voucher? Well, we want to see a unique reference number, the date and details of the expense. If there's any VAT that can be reclaimed on that purchase, we'll show that separately. We'll also include details of who's claiming the payment and who authorised the payment of petty cash. So up on the right hand side of the screen, I've got a petty cash voucher, and there we can see all of that information recorded on the voucher itself. Now, associated with petty cash is the petty cash book, and this is where we record all petty cash receipts and all petty cash payments. Now, this petty cash book, it is a prime book of entry, so that because it's the first place where we will record any petty cash transactions. And sometimes, in the same way that the cash book is sometimes used as part of the double entry system, the petty cash book can also be used as part of the double entry system. So what would our petty cash book look like? Well, there are a number of different alternative layouts, but it does have a similar layout to the cash book. After all, it's still recording receipts and payments. The main difference, though, is that certainly the receipt side of the petty cash book tends to be much simpler, because it's rare for there to be anything other than simply money drawn out of the business's bank account going into the petty cash tin. So up on screen, we've got an illustration of a petty cash book. So on the left-hand side, I've got the amount received. I've then got date, details, perhaps a reference column, and then total payments, and then those payments are analysed. So let's have a look at how we would record receipts in a petty cash book. Well, let's say that on the 1st of April, the business drew out £100 in cash from its bank account and put that in its petty cash tin. So we would record the date, details, if there was a reference, we'd include that, and the total amount that went into petty cash would be recorded in the receipts column. Let's now say that on the 2nd of April, an employee took one of the business's postage stamps for a personal letter and then paid 64 pence into the into petty cash. So this is a fairly unusual transaction, but it's the sort of thing that can happen in practice. Well, here what we would do is very similar to what we did with the receipt from the bank. So we'd record the amount received, the date, provide some details, and if appropriate, we'd record a reference as well. Let's now turn to payments. So in respect of payments, we would record the same sorts of details. So let's say that we have a petty cash payment of £6 including VAT for stationery. So we'd record the date, would provide details, the reference there that I've recorded, that might be a petty cash voucher, and then I've recorded the total paid at £6, and I've split that out between VAT and stationery. Let's have a second payment, so this time a petty cash payment of £25, but no VAT on this payment for window cleaning. So we go through the same process. We'll record all of that information. This time the £25 is analysed and recorded in the cleaning column. And finally, a petty cash payment of £15 plus VAT for a taxi. So the total cost will be £18 including VAT. So that's the amount that would be recorded in the payments column, and then we'd analyse that £18 between VAT and travel expenses. Now at the end of a period, and this might be say the end of a month, we will total up all of the columns in our petty cash book. So there we go, we've totaled all of the columns up. And please note that on the payment side, all of the analysis columns, the VAT, travel, stationery and cleaning columns, will add up to the total in the payments column. And that way we can do what's called a cross-add check to try and make sure that we haven't made any simple errors in recording any of the payments or totaling up any of the columns. Now, of course, I mentioned earlier on that there can be a variety of different formats. So let's just have a look at a slightly different format, but one that contains the same information as before. In this case, we've got receipts on the left-hand side, and please remember that receipts will always go on the left-hand side of a petty cash book and payments on the right-hand side. But here, rather than having a single column for date and a single column for details, we've split it up so that we've got a few more columns in the table itself. But the basics are all the same. So let's now have a look at how we post the information from our petty cash book into the general ledger. So each period we're going to post those totals that we've just calculated in the petty cash book to our general ledger. When we look at the receipts, what we're going to do is we will debit the total petty cash received to our petty cash account, because any monies received represents an increase in the value of an asset, i.e. petty cash, and is therefore a debit. We will credit those accounts that tell us where the petty cash has come from. With regards to payments, well, each payment from petty cash represents a reduction in the amount of petty cash held, and that's a fall in the value of an asset. So we will credit the total petty cash paid to our petty cash account, and we will debit all of those accounts that tell us what the payments were for. So with our example, I've got the receipt side of the petty cash book on the screen at the moment, and let's see how we would post this. So first of all, with that total of £100.62, we would debit the petty cash account with that amount. Then we would credit our bank account with £100, because that's where most of that money has come from, and we would credit our postage account with 62p. Let's now have a look at how we would post the payment side of our petty cash book to the general ledger. So again, I've got the payment side of the petty cash book up on the screen. And here we would first of all credit our petty cash account with £49, the total amount paid. We would debit all of the other accounts. So we debit VAT with £4, we debit travel with 15, debit stationery with 5, and debit cleaning with £25. So let's now have a look at the petty cash account in our general ledger. Now, in order to do so, what I'm going to do is I'll assume that at the start of the period, the business held £50 in petty cash. So here's our petty cash account, and we will record the balance brought down of £50. Now, petty cash is always going to be an asset. Because you can't hold negative banknotes and coins. So our balance brought down will always be on the debit side of the petty cash account. We'll then record the petty cash receipts again on the debit side and the petty cash payments on the credit side. Now that we've recorded all of that, we can then calculate the closing balance, the balance carried down. So we look and add up all of the numbers in the debit side of the petty cash book and all of the numbers on the credit side, and we can clearly see that the numbers on the credit side add up to a smaller amount than those on the debit side. So we will record a balance brought down, carried down on the credit side, so that the total of both of our columns add up to the same amount, in this case £150, 52 pence. So my balance carried down is £101.62, and that's the amount of petty cash that we should hold at the end of this period. That balance carried down is then brought down to the start of the next period, but it's brought down on the opposite side. So the balance carried down is recorded on the credit side, the balance brought down is on the debit side.